Okay. Mark Matthew joins us now. Let's connect with him to get a sense of what he makes of the current market setup, Fed commentary, and what we should expect now. Mark, everything is moving on expected lines. And I frankly look at the market from the prism of the US Fed. The US Fed pretty much has said what everybody was expecting. Growth is decent and rate cuts will start.
I actually did not expect them to be so overt in telling us there will be a rate cut in September. They didn't need to because the market's already pricing one in. So I felt that was interesting. There was no urgency in the statement or Jerome Powell's comments to the press. But I think the most interesting thing is there was a sentence in the statement for 2 years saying that inflation was the most important criteria. And that was replaced with the dual mandate, coming back to the dual mandate of inflation, but also employment. And Jerome Powell said in the press conference that he wouldn't want to see the labor market cooling further. So I put it all together, and yes, there will be a rate cut in September. I do find it somewhat curious that they were so blatant about it. They didn't really need to be.
Okay, let's also understand what your outlook is, Mark, when it comes to the liquidity situation in particular for the FIIs and how you're looking at the kind of gush of liquidity domestically that has been supporting our own markets. What's the trend like?
I don't like what I see. I wish there would be a pullback in the Indian market. It's becoming overvalued. I mean, as a shareholder, both personally and our bank, we own shares there. Of course, one likes to see the shares go up because that's good, but I don't like to see things become overvalued, and that's what's happening. But you know, it is a free market. You have to let it do what it does. Once in a while, an analyst can step in and make a comment like I just did, but otherwise you have to let it do what it does. And I suspect that given the tremendous liquidity and the fact that that people are seeing stocks go up, they tend to be momentum followers. It probably will go up more, but I wish it wouldn't. I wish it would pull back here and rest a little bit.
Yeah, don't we all wish the same? But Mark, when it comes to India specifically, what is it that you're sensing? There's quite a bit of sectoral churn at play. We were just talking with our experts before you as to how pharmaceuticals, IT, the energy plays, the traditional ones, that is, the other ones which have actually made a comeback. What is it that you're liking when it comes to India?
Well, around the world, there does seem to have been a bit of a rotation in the last month to, I guess, what you'd call more cyclical names. As a house, we are fundamentally growth-oriented when it comes to equities. And we recognize that, there can be occasional pullbacks in growth stocks once in a while. There can be rotation once in a while, but when it comes to equities, we would rather own growth companies than value companies. And for value, we find plenty of value in fixed income. So I would stick with the growth, even if, number one, I think that some of it's overvalued. Number two, there does seem to be some rotation going on. In India, the growth is kind of the opposite of what it is in the US. In the US, value is small caps and growth is big caps. And in India, it's the other way around. And so I think that there are a lot of emerging sectors in India which are small now, but will be big sectors in the future, like hospitality, like defense, that are in the mid-cap space primarily. And I would say those are the growth areas that long-term one would do well to be in.
Mark, let's understand what your outlook is as well when it comes to the kind of earnings fine print that we've seen so far back home. Are there any sectors that have stood out, like a sore thumb, for instance, on the upside or the downside? And what is it that you're expecting by way of earnings going down the line?
It wasn't clear to me if you're referring to the US or India. I'm sorry, but with the US, what we're seeing is that a lot of people are questioning the amount of money that's being invested by the large technology companies to prepare for the AI future. And they're kind of darned if they do and darned if they don't. In other words, whatever they do, they're going to get criticized, because if they don't invest, then people will accuse them of not being ahead of the curve, of not investing in the future, of becoming a Kodak or a Blockbuster. You've got to stay up with the technology. And on the other hand, if they do invest, then people will say, oh, you're putting too much money into this thing. It's been overhyped. Our view is that AI, maybe it's being overhyped, but it's for real. It's not going to be, I don't know, like what driverless cars, 10 years ago, everybody said we'd be driving, well, we wouldn't be driving, but 10 years ago, everybody said cars would be autonomous vehicles by now, and that's not the case. 10 years ago, people were saying that robo investing would take over traditional investing. So there have been these kind of phases, these what do you call, trends that they just didn't end up becoming true. But I think AI is more like the internet. It is very real. And even if companies are perhaps over-investing now, they will be vindicated in the future, because we just don't know exactly what it'll look like, but it will be big. So they are right to invest a lot in it.
Right. Mark, the other thing I just wanted to chat about is, in the run-up to the US elections, how is it that you actually see the world markets pan out? Because many believe that if indeed world markets have to pause here, or even see a bit of profit-taking bout, that has to be global in nature. Do you think the US election and the events unfolding thereafter could be perhaps an event risk?
I do, because I think right now the market is convinced that Donald Trump will be reelected. But Kamala Harris is running a very good campaign. And if you look at the betting websites, the one that has the best track record is called Predict It. It's a nonprofit website, so it only accepts very small bets. So you get tens of thousands of people putting small bets on things instead of a few people skewing the odds with large money and making it less accurate. So anyway, Predict It, as of yesterday, is actually giving Kamala Harris a larger chance of winning than Donald Trump. But that's based on the popular vote. And as you know, in America, the way it works is the electoral vote determines who goes in the White House. Nate Silver is probably the most accurate forecaster when it comes to the electoral vote. And his modeling is still showing that Donald Trump will win that. But I would say, that it's possible that Kamala Harris could be the next president. And if she is, I suspect what will happen is the Republicans will retain the legislature, in other words, the House of Representatives. And the Republicans, they spend like drunken sailors when there's a Republican in the White House. But if there's a Democrat in the White House and they control the legislature, all of a sudden they become deficit hawks. And so I see a situation where if Kamala Harris is president, she's not really able to spend much because the House of Representatives won't let her. And she certainly wouldn't be extending Trump's tax cuts. So that scenario actually would be bullish for United States Treasury bonds, which is the opposite of what most people are pricing in now.
Been a pleasure interacting with you. Thanks so much for giving us your take on our own markets, what's happening across the globe, as well as the US elections, and of course the FII flows. Just a